does the next 10 years hold?
Well, I think apocalypse has always been a more dramatic term than I would use. It's more of a transition, and retail's so dynamic. There's always comings and goings and trend changes, and I think the Amazon trend over the last 10 years has certainly impacted and changed how consumers think about retail. The next 10 years, I think technology is going to impact everything, and technology in brick and mortar is really just starting. And as those stores get enabled, as Courtney said in her report, right now it's still 89% of retail, and even by some of the most optimistic projections, isn't going to hit 20. And so how retailers adjust and adapt to adding technology into their business over the next 10 years, I think will determine who the winners are.
All right, so Bill, what you're talking about is the sort of hybrid model that even Amazon has gone towards. Is that sort of the key to success for retailers in the next decade, having a brick and mortar presence with some interesting technology inside of it and also an online presence, of course?
Exactly. I think you're seeing Target actually did a wonderful job, and Brian Cornell and his team showed that if you use your physical store platform to enable your digital business, you can actually do it and make money. Walmart's now, and I think Doug McMillon or somebody at Walmart recently made an announcement that they were going to start emphasizing the use of their supercenters back again to build a digital platform. Amazon has realized, wow, after I get to 2-hour shipping, I can't go negative shipping. And by the way, that's really expensive and I can't make money. So Whole Foods brought into the play, and now how are we going to have to start having a physical presence to give the customer what they want, whether it be order online, ship to home, order online, pick up in store, digital checkout, some of the technology that's just beginning to hit retail stores, which it opens up just fascinating opportunities for companies and consumers.
Courtney, as we have this conversation, it really sort of begs the question about where investment within the sector more broadly is headed. I mean, you can take a look at the stocks that have outperformed within the sector this year. They've had one of two things in common for the most part. Either they are companies that are providing the technology and some of that technological infrastructure like Shopify, or they're companies like Walmart, like Target, that have invested very heavily into this more omni-channel approach. In terms of the laggards, have they been making the same types of investments?
So I think we've seen a lot of names go bankrupt or liquidate in the case of the original Toys R Us. We know that they're coming back. And that's a really good example, Morgan, of a retailer that could have had an experience and could have really infused technology like what you're talking about and really didn't. And part of the reason they didn't or couldn't was because of these big debt payments that they had. And that's sort of where the cash flow had to go. So like any business, retailers obviously have to balance an awful lot of things. And so I think the aim for everyone is to do a model like what Target has done and try to use those retail stores and the online platforms as interchangeably as possible. It's not going to work for everyone and every format. And then I just keep thinking about a format like an off-price retailer, like a TJ Maxx or a Ross Stores. They have websites, but they're not exactly the same as a shopping website like shopping at Walmart.com or at Target.com. So there is something about that treasure hunt and that experience that you also need to try to capture. So it's a little hard to say about the folks that have fallen behind, and did they fall behind because they didn't infuse the technology and that omni-channel presence. I think in some cases, yes, but I think it's just so much more complicated than that for a number of these names that aren't doing as well.